Well, I'm tracking Jindal Stainless and the numbers were very, very good. I stick to that. If you look at it on a sequential basis, the volume numbers were more or less flattish. On a year-on-year basis, though, it was much higher. The problem is yesterday, intraday, the stock from being down close to around 2%, it had ended with a gain of around 2%. So it appears there was an element of pre-positioning out there. And because of the overnight news with regard to tariffs, that's what's hurting sentiment. But let's pull up some of the graphics with regard to how the numbers were. That's the volume number. Good growth is what you're seeing on a year-on-year basis. And most of the top line growth has come in on a year-on-year basis because of, of the higher volumes. The EBITDA number, though on a year-on-year basis, it appears just a little bit better. The margin improvement is something that you like on a sequential basis. So just take a look at the way the margins have recovered. Last quarter, they did around 10.5%. This time around, it's a recover to close to around 12.8%. Even on an EBITDA per ton basis, the entire realization gain of around 4,000 rupees per ton, that's come down to the EBITDA per ton as well. So realization gains have flown down. So you like that at around 20,000 rupees on a per ton basis. The debt number is more or less constant in spite of going in for some capex. And one of their subsidiaries, which is JUSL, out there, the operational performance as well has improved. So the reason the stock is down is because maybe an element of pre-positioning, maybe some uncertainty on the tariff front. Given that their export contribution from around 17% or thereabouts around 8 quarters ago, it's come down to around 9%. So they'll struggle on the export piece, but otherwise these numbers look good. There's a sequential recovery in terms of the EBITDA per ton.